Okay, Graham, I'm going to make you the presenter. Looking forward to meeting you, hearing your voice. How are you today, my trading warrior brother?
I'm very good, Dale. How are you?
Great. You must be burning the midnight oil over there, huh, buddy?
Oh, not
What
a problem. It's 1 o'clock in the morning my time, but that's no problem.
All right. Well, Graham, so great to meet you. I found you on Twitter, and I'm always interested in the beginning of people's journey, how they got involved in the industry. Can you tell us how it happened to you? Did you have a mentor, or what was the catalyst?
Well, I worked as a civil engineer for about 30 years and built up quite a bit of equity during that time. And a group of us sold one of our companies to an American company. It was a New Zealand-based company, but we were bonded for a period of 3 years to the American company because the value in the company was all about the people. And during that 3-year period, what happened was a little bit extraordinary. Our internal share growth was 25% a year, but the time between selling the company and when I cashed up, the New Zealand dollar changed and almost doubled. And so I made gains both in share value and in foreign exchange value. And I thought, well, none of that was due to me. I'd like to learn a bit more about this.
Yeah. Okay. So you saw what a major effect exchange rates could have on total return. And
absolutely.
So,
if you can get gains in both directions. So I worked abroad managing large energy projects, developing hydropower projects for many years. And that's largely about risk management. If you don't get your risk evaluated and managed, then you're in big trouble. And these projects were of a size where you would have serious trouble if they went wrong.
Yeah, and so not just loss of money, loss of life.
Absolutely, and unfortunately, Dale, that that certainly did happen on some projects. Not that I was associated with that, but I certainly witnessed that, and that's a tragedy. But one of the things that you learn when you're managing companies like that is that if you don't really fully understand your risks, then your company's exposed. And as you say, safety's obviously one of those big risks. And you had to have a very strong discipline to try and create an environment where all of those risks were identified, and then you could create a plan to deal with them all. And so those two sort of things, the discipline and the risk management, sort of gave me a little bit of a foundation because I sat on the beach for a little while after I finished working overseas. I brought my kids back to New Zealand for high school, and I thought, what am I going to do next? And I thought, well, I've had a strong interest in markets. I really want to learn how to trade. And so I knew nothing. I'd been investing, obviously, but relying on financial advisors to guide me.
Right.
And,
you mean sales?
Sorry?
You mean salesman?
Yes, and certainly what I discovered now that now that I know what I know is that they knew less than me.
Yeah, they knew what all the loads were on the products, all the commissions.
Well, that's exactly it. I mean, basically they were selling my equity into funds that gave them the biggest fee.
Yes, let me convert my client's equity into commission income. Okay, so you went that way. You gravitated towards these. You want to talk about median lines today. Did you start off, I'm just guessing, with maybe Andrew's pitchforks?
Yes, well, I actually started with a number of different traders I was quite determined to learn about trading, so I worked alongside a number of professional traders, a lot of names you'll know, and I finally found my feet with median lines, and I've got a short presentation to show you what I mean about median lines, because a lot of you may not be familiar with them.
Yeah, beautiful.
So when you're ready, I'm more than happy just to perhaps go through that. And
okay. You now have control of our television set, Graham.
Okay.
All right, so go ahead.
Okay, so
all right. Okay.
This is just a little bit of education about median lines. So we're just going to go back to school for a couple of minutes, if you don't mind. Now, median lines have been around since the early 1900s, and they were used to evaluate markets back then by people like Roger Babson and
Oh my God. Let me
George
just,
Marshall.
I'm sorry to interrupt your lecture, but you know, you're the first guy, and I didn't know that he was behind it. But I remember being told, like in the 30s, that the first 3% move to the downside, according to Babson, was the beginning of a bear market. And
Okay.
they called it the Babson break.
Ah, yes, yes.
Right?
Well,
And so, you know, I'm fascinated that his name came up. So go ahead, buddy. I just had to tell you the only thing
sure.
I knew, which is pretty famous. You know, when we were down in February, we had some 3% down days. I think Roger would have called it a Babson break.
Well, I believe he was commissioned by President Roosevelt to do some forecasting way back then, and the forecast that he produced using median lines predicted many things over a 15-year period, even in spite of the World War occurring. So he has got quite a reputation. But the median lines really define a path where price sort of oscillates around. And to put a median line on a piece of chart, it's a matter of just using 3 significant pivots. And it's easier to explain when you start seeing the pitchforks. But what you see when you get this median line in the right place is you'll see price action and reaction to it. And that information is very valuable. So you've got trend and you've got action and reaction, which is either support or resistance. Then what happened as the idea evolved is Dr. Alan Andrews developed the work on the earlier median lines, and he befriended Roger Babson, and they worked together for a little period of time. And what Andrews did is develop the Andrews pitchfork, which many of you are probably familiar with on your charting platforms.
Right.
And he essentially took the median line and put upper and lower parallels on it. Okay, so it's really as simple as that. And instead of just looking at action and reaction to the median line, he started looking at action and reaction to the outer parallels as well. And you can see that this can build up quite a powerful picture. This is treasury bonds from 1981, and there's a blue median line on here drawn on 2 pivots. And that median line, as you can see by the green highlighted areas, has defined the middle of that price action ever since that time. And so you can see where to anticipate resistance and support and trend and changes in behavior. I'll go over the bonds a little bit later. And just here's a little bit of terminology, and I won't dwell on this because people can always play the recording back and look at it, but it just explains some of the terminology that I use around the pitchfork. And this is a normal pitchfork in the down direction, and it's on cocoa futures. And you can see that the validation that's been building around this upper parallel helps to get this pitchfork some credibility. That's your resistance there, and it's defining it extremely well. It's not a trend line, it's not a channel, it's actually a median line off this pivot. And there are 2 other types of median lines, and they are very, very similar. The only difference is that the origin on a modified shift is shifted vertically and horizontally by 50%. And the reason that that's done is often you'll find price behavior flattening off, and so a normal pitchfork won't do it. This is coffee futures, and with this modified shift, it actually caught this top right here, virtually within pips. And I think the futures actually declined quite considerably after that. And the last type is this one here, which is a shift pitchfork, and this is on copper. And the difference here is that the origin is purely shifted vertically by 50%. And so those are the 3 types of median lines that I use. And what you try and do is just select the one that gives you the best action and reaction, the best fit to the price that's unfolding.
Very nice work.
And this is, again, cocoa futures, but this essentially enables you to do continuous trading. I do a lot of position trading and swing trading. And so if I can see validation building along a median line like this, as it did in cocoa, I'll just hold a position. And what I'm then looking for is I use internal pivots with these little dashed red lines, which are called sliding parallels or SHs. And you can see that you get action and reaction to those. And if you know where to sort of expect where resistance will be in a downtrend, then you know exactly where to put your stop loss. And so you can protect your position very, very quickly. And down towards the bottom of this chart, what's happening is there's a bit of a change in price behavior going on. So price is not making those lows. It's not hitting this line anymore. In fact, it's actually stepping up. And that's what we call a change in price behavior. And that's time to get out of that trade.
Okay. What would that would tell you get out of your shorts? What would tell you to start considering longs on this picture?
Essentially, what I'd be looking for is building support in a credible way. So there's actually support here. The next thing would be a break above this median line. And I've got some examples shortly, Dale, which will show you how that works.
Okay, buddy.
So we've almost finished the educational slot, so hopefully I'm not sounding like a school teacher, but no, these methods are over 100 years old, and here it is working perfectly on Bitcoin. And this is the chart is a bit scrappy. This is from a trade plan from about 18 months ago, I think. But here, a single median line is showing me where to expect support. So you can see support here. You can see price stepped up and then came back down onto the median line, support there. It stepped up again, hit resistance at these outer warning lines, came back down and hit the upper parallel. So you can see where to sort of expect support. And a lot of traders, even what I've been just listening to in the last hour, look at support horizontally using Fibonacci. Nothing wrong with that at all. What I do is look at support and resistance along the trend of the median line. And it's quite astounding what you'll see often. So the terminology is explained there. I won't dwell on that. And I just wanted to show you one of the key things, one of the key reasons why I got so interested in median lines. So the education part's over. We'll start looking at some real charts now. Okay. And certainly if you have any questions, Dale, just scream it and I'll stop.
Okay.
But this is a typical application of median lines on a stock that we all know, GE. And this is a weekly chart. And the blue median lines were showing a nice uptrend, but the price behavior started to change. The sliding parallel up here, price failed to reach it. There's a little gap there. It went down, then price came back up and retraced, and it failed to reach that upper level. It actually only reached a lower level. And for those who use Fibonacci, that actually also corresponded with a 786 retracement. So you're getting two pieces of information that are giving you a pretty valuable trade setup there.
Confluence.
And that's really quite an obvious, or to me now anyway, an obvious change in behavior on a weekly basis. So what I then did is looked at the weekly to daily chart. Now this is the daily, and this is where the top was in the weekly back in July 2016. And I waited for the retracement. Here's the 786, and I put a new median line on it. And I waited until I got validation of the sliding parallel. You can see the price was finding resistance right along this little line here. And so I made an entry with a stop loss just above the outer parallel. And you can see that the risk margin is very, very low here. And within several days, that was break even, or the stop loss was moved to break even. So essentially what you're doing, this can be worked on any time frame, but this is an example of a position trade where what you're looking for is just continuation of the downtrend and any changes in behavior. And what you see along the way are some patterns that help to confirm that behavior. You know, here for instance, you recognize a rectangle pattern, classical chart pattern. And so there's another entry point there. Now I try not to enter classical chart patterns when they break out. I'd rather enter on the other side of them, to be honest, because that's where the risk is lowest. And so what I'm looking for here is just more and more validation to the median line. And all of a sudden you start seeing it occur here where you get reaction to the sliding parallel, you get price moving down, finds support along the median line, tries bouncing up, it can't make it, and then falls down again and finally breaks down through the median line. And this is really a great sign of acceleration, which is often associated with an impulse wave. If you're, a few of you will be familiar with the Elliott wave terminology. But when you start seeing price dropping down through the median line like this, this is getting stronger. This is acceleration. And so there are other places where you can pyramid the position with very, very low risk. Now, I got stopped out of this trade just recently, and but I'm not worried about that because I've traded what I believe is one of the strongest moves within this chart at the moment. And if it goes up to this line here and then keeps going down, I don't really care. I'm quite happy with the trade that's occurred here. The reason I got out is there was a little change in behavior where price started finding support at higher levels, and you can see that this sliding parallel was where I'd had my stop losses set, and prices were tracing higher. So this could be a wave 1, 2, 3, and now we're in 4. And I'd rather not trade corrections or sit through the drawdown of corrections if I could avoid it. So that's how I used...
even Elliottians don't like to really trade fives. They let fives happen without them.
That's right. I mean, it depends on the trade too. I mean, sometimes it's worth holding on, but in this case, I just decided not to. But the key thing here is my focus is purely on risk. So the median line is giving me a roadmap for price. It's giving me a trend. It's giving me resistance, and it's showing me changes in price behavior. And you'll notice that there's no indicator on the chart. I'm purely focused on price, and that's what I like to do. But I also...
I hope your shades are drawn if you're trading, since you trade naked.
Sorry, what was that, Dale?
I hope your shades are drawn since you trade naked.
Right. I generally got
but
the blinds.
I'll tell you something, Graham. What a grand slam presentation of median lines. Way over my expectations, and really, it's just geometry, isn't it? All markets are geometry, isn't it?
That's the key thing. I think the reason that these things work the way they do is because of the fractal nature of the way price unfolds. And those of you who use Fibonacci's will understand this exactly.
Right.
So you put a median line on your Fibonacci pivots, and you'll start seeing something quite magic. And it just really does provide a roadmap. It's not perfect, but no method is, and at least it tells you early when you're wrong, and that's the key thing.
I'll tell you what, it's worth learning. I would, I would need to learn this to add it to, you can't teach an old dog new tricks, but I think that's definitely worth learning. And you've given one of the best presentations on, tying in median lines with pitchforks and all the really intricate work with a simple concept. I'm very impressed.
Well, I think the thing that I learned, Dale, I've studied virtually every method you could describe, including Gartley, including Elliott wave. And to be honest, what happened in 2011, the city that I live, it had very devastating earthquakes.
Oh yeah. Yeah.
Over a period of about 2 years, and I actually started losing money, and I thought, gee, I can't trade. I mean, my desk was literally shaking every hour, and the sleep deprivation, you can't trade under those stressful environments. So
no, you can't.
I thought,
what is that? There's a church in the name of the area in New Zealand, right?
Yes, there's a cathedral, and it's still in ruins. I mean, the city was...
What's the name of the city?
It's Christchurch in New Zealand.
Okay.
Yes.
Okay.
So
yes, I'm in California, so I understand.
It's well, you're not far from a pretty big fault line there too.
Yeah, big one. So you have a couple business models I noticed on your website where you have a subscription and you also mentor.
Yes.
So,
what I try and do is I'm trying to build a community that are really interested in learning about median lines and how powerful they are. And so I publish weekly reports and intra-week reports on different markets. And I was about to show you something on the US indices. And I also just have some on-demand courses. But the key thing is these median lines are quite simple. And quite often, one of the techniques that Dr. Andrews used was to use 3 pivots, P0, P1, P2, to find P3. And then when P3 formed, you'd wait for P4, and then put the median line on P3 and P4 to find P5. And so the Ellioticians amongst you will already recognize what this means in terms of the Elliott wave principle for an impulse wave. And this is a very simple way of monitoring trends, so effective that here's one for emerging markets where you can see support and resistance between 2 lines. Now, if you know where that is, even if you're a day trader, you can actually day trade using this chart, using the support and resistance levels. Mm-hmm. And the thing that I'm really interested in at the moment is where we are in the US indices. And I know a lot of people are interested in that. And so what I've done is applied median line analytics to that. And to help with understand that, I've just looked at a number of historical events. This is in the 1920s, where you can see a very nice single median line that's defined the trend and support all the way up to the top. What I also do, when I do use an indicator, I use RSI, and I know you do as well, Dale. I use it so differently from anyone else I've ever met. I developed these methods myself during those 2 years where we had the earthquakes. Because I couldn't trade, I did a lot of testing and developed systems. And so the momentum signature is just as important to me as price is now. And I just use median lines on that to monitor what's going on. And obviously in trends, you'll see divergences, and a lot of people get really confused about divergences and think, what does that really mean? Well, I've learned to understand what that really means. And what I'm looking at now in the S&P 500, for instance, is this example where we just followed the Dr. Andrews guidelines and put the median line on P1 and P2. And you can see that the trend has been well defined all the way up to this top. And you can see that the sliding parallel through here is to find resistance all the way through. It's like, if you just saw the blank chart and didn't have these lines on it, you'd see a lot of different things. But the lines help to sort of train your eye onto patterns and trends. But up the top here, you can see that price behavior has failed to reach the sliding parallel. And that's a really distinct sign of change of behavior. And obviously the market started rolling over and corrected. Right, and remember that. All I've done then is just used a median line to monitor the correction. So I can use them on corrections as well as trends. This, I believe, was either a zigzag or a flat, but it's essentially that's picked it up pretty well. So now we can apply a median line on P3 and P4 and try and find P5. What I've noticed is something a bit odd, and I'm sure you can relate to this, Dale, from your own use of RSI. What we've got here at this last high in the S&P 500 is no divergence. We've got the maximum reading of RSI. And from my back testing, I can't find any examples where that's occurred at major tops. Now, that's I may be wrong. Theory on RSI. That confirmed highs with RSI, with price, are rarely the high. Maybe a high, but not the high. That's what I believe in too, Dale. So what I'm looking for is further upside. And the thing that I want to focus on now is I believe that there's a potential for this fifth swing to extend, and it already has. It's actually extended quite a long way beyond where you would normally expect a fifth swing to extend. If the labeling's correct, we're pretty close to a 786 extension here, and I think the Nasdaq's even higher. Yeah. But when I looked at an example back in the Dow Jones in the 1930s, here's the median line on P3 and P4, and the extension at the 786 level, which is where we currently are, produced the highest momentum right here. And so what I'm expecting is further upside, and I may be wrong, but I know where I'm going to be wrong. And what I'm looking for is a divergence at a top, at a significant top.
Okay.
Now that doesn't mean to say that we're not going to get a correction, obviously, in the meantime, but you know, the median line seems to be working pretty well. This, I don't think we've often seen markets extending this much in a fifth wave. It can happen, but this wave count must be right because it's Bob Proctor's and he's always right.
Oh, yes. Well, really interesting look at that, and interesting confirmation that you did all that back testing. I was just assuming. I have seen exceptions. You know, there's an exception
Yes.
to everything where you have confirmed highs and lows, and they end up being the high and low, but it's definitely not the rule, more the
Right.
exception.
Yeah.
So what a great presentation, Graham.
Well, I hope I haven't put anyone to sleep, but the other thing that median lines can do, Dale, is that with channels, you often need more points before you can use channels or trend lines. Whereas with the median line, you can actually do it with the first 3 pivots. And the other thing to look out for is things like this here, where you get a false break. That's in an uptrend potentially very bullish, and in this case it was.
Right.
And often when you also get a break, when you finally get a top in, the retracement often actually kisses or retests the underside. And you often see that in channels as well, I believe.
Someone in the community is asking what your hit rate is if you track it. You know,
My
that
hit rate.
means you know, are you right half the time? Are you right if you track it 60% of the time? That's the hit rate.
I don't have the statistics, but what I do know is I know now when to look for changes in price behavior which say I'm wrong, and I can show you a couple of examples. So if price is not doing what you think it should be doing, then something's wrong, and that's the way to look at it.
Okay. All right. Well, go ahead.
The other thing that is interesting is looking at the other US indices like the Russell, which has made new highs recently.
Yeah.
And that's something that the S&P 500 and the Dow haven't done.
Right.
The thing I've also noticed is the S&P 600 has made new highs, and so have the FTSE and the FTSE 250.
So it's a message that broader markets, the underpinnings of the market, advanced decline lines are, this is positive for the rest of the market?
I'm getting the impression there's further upside, but I can see the potential for some of these indices to be caught in corrections. And, you know, one of them...
Like the Russell here?
Yes, this Russell has made new highs,
yeah,
and it may be off to the moon, but I can also see that I can see what I would call a double zigzag potentially there, where I've got a blue median line and we're virtually at the upper parallel.
Right.
Now, if we zoom up through this and keep going higher, then this is clearly potentially not corrective. But
all right, I have a question to ask you with this example. So I know we're at resistance here, but aren't you always better off shorting the weakness than shorting the strength? And Russell is a strength, and you're talking about the S&P and the Dow not making new highs that are still in potential failing rallies. I know it's always more attractive to, you know, short the thing that's the strongest, but isn't it more of a higher probability outcome if you short the weakness that is being carried up by something like the Russell, so that when the Russell pulls back, the weakness accelerates?
Well, it's an interesting point. It depends whether you're a trend trader or a counter trend trader, Dale. My rules that I use for median lines is that I must trade in the direction of the dominant median lines, and the weekly, the daily, the 240 minute are all pointing up, so I can't short it. That's just my rule. That's my rule. But your point is
good rule.
Well, your point is good too, because you know, there will be a point where you might actually get a top that occurs here at equal swings, which is very common, or at this line, and that could be an excellent low risk shorting opportunity. But what I generally do is let the first leg come down first and put a new median line on that and trade it that way.
Yeah, wait for confirmation.
Wait for confirmation, yes.
Got it. So there you are, median line analytics. You want to show us the treasuries too?
Just a couple of quick charts. And oops, sorry, I'm jumping around a bit there. I won't dwell on that. That's the monthly, but there's something pretty big potentially about to happen here. If we drop below this level, this lower parallel here, this is bonds, futures, and if we drop below, say 137.50, that's starting to get to be a change in behavior on a monthly basis in my system.
Yeah.
And I've been tracking this on daily, and so far, the trend has been down nicely. It's been a beautiful trade, actually. It's validating very nicely, but I haven't got a divergence here yet. But I'm looking out for a potentially some type of low, and I'm looking at the 618 extension here. So I'll use Fibonacci extensions in conjunction with the median lines to help with targets as well. But at this stage, I see support along this line, and I see resistance above here. And as soon as one of those starts to break, then I'll start thinking differently.
I see. Okay, so we're close to a very important area that the bonds could either launch some type of recovery rally or really accelerate to the downside.
Well, and I think that's where we are, Dale, exactly. And if you look at the yields, a slightly different picture there. You've actually got a horizontal boundary there. And, you can obviously see a potential head and shoulders pattern there if it is. But the implications of that are pretty severe if yields start doing that. So all I'm doing is tracking this with the median lines, and the pink one is currently still valid. Everything's going up, but we need to really start breaking up above the blue one to give that stronger validation. So it's at a pretty interesting point. It might all pull back from here, but if it does start to rise rapidly, I wouldn't ignore this.
Okay, Graham. Well, do you mind if I call you my median line trading warrior brother?
Not a problem.
Okay, and Graham, I want to thank you so much for a great tutorial.
No problem.
Edifying the FA.C.E community today, and really appreciate you being here, and hope we could do this again down the road.
All right, look, I appreciate the opportunity, Dale, and thank you very much.
Okay, so people could follow you on Twitter at Trading Motive, and that's also the name of your website.
Yes, I've got the just the details there.
Okay, beautiful.
That's perfect.
Take a picture, everybody, and get a hold of Graham and learn about median lines, and then teach me.
That's great.
Really a great interview. Ed Schaefer's thanking you, Anthony thanking you. So you're well received, Graham. I appreciate it, buddy. I hope that pips and Kiwi dollars or whatever, or Bitcoins rain down on you and everyone you teach. And
perfect.
And hope that there's no more shaking, but looks like even some good things came out of that for you with your work.
Oh yes.
During the shake rattle and roll days. So thanks again, buddy. Great to meet you, Graham.
Same here. Take care.
All right, Face. That's it. Let me just take a quick look at the crude here. Let's see. Did it get up to 80? No, it didn't make the third drive yet. And so far, the cover on the short dollar looks okay. All right, everyone, have a great day. See you tomorrow. Remember, don't just count your pips, count your blessings. And remember, if you need a new broker, contact Forrest Park FX Trent, and he'll find a good fit for you, whether you're in the US or not. Spreads, whatever your platforms, whatever your needs are, give Trent, send him an email, give him a call, and we'll see everyone tomorrow, hoping that Steve and Stelios get to Cyprus safely, and Greg is going to be with us tomorrow, so don't miss that. Adios, everyone. Thanks again, Graham.